Hi, and welcome back to the Independent Investment Banking course. This is Lesson 6, Investment Banking as an Intermediary, bridging the gap between sources and uses of capital. So once again, we're going to be talking higher level about really the role that investment bankers play in helping to originate opportunities for capital, whether it's strategic, financial, or high net worth. So in terms of introduction to investment banking as an intermediary, really we're talking about connecting investors and issuers. So investment banks act as essential intermediaries, linking those who have capital investors with those who need capital issuers. The connection facilitates the efficient flow of funds in the economy, and it helps to facilitate economic growth. So by enabling proper allocation of capital, investment banks play a crucial role in supporting the growth and development of businesses, driving innovation and fostering economic prosperity. So in terms of the overview of this lesson, what we're going to be going into is we're going to be exploring the various roles and services provided by investment banks and highlighting the bridge between sources and uses of capital. So in terms of the role of investment banking, there's a range of financial services related to an underwriting, advisory, sales and trading, asset management, as we already discussed. And these services are aimed at raising capital, advising on strategic transactions, and managing financial assets. So acting as intermediaries, facilitating transactions that may not have happened otherwise due to lack of expertise or resources. They provide the necessary infrastructure and expertise to execute complex financial transactions. And in terms of enabling efficient capital allocation, they help to allocate capital to its most productive uses. And really, that's the game when it comes to the capital management game, is the highest and best use of capital. So in terms of capital markets, a platform for capital flows. There are primary and secondary markets, and investment banks play roles in both the primary and secondary markets. But, you can traditionally think of them as the primary market facilitator. So where new securities are issued and sold to investors for the first time, while secondary market deals with the trading of existing securities, investment banks are active in both markets, facilitating the initial sale and subsequent trading of securities. So in terms of primary markets, you can think of IPOs, bond issuances, etc., taking the risk of selling these securities to investors, and they help to determine the price of these in market these securities. And in terms of secondary markets, they act as market makers, providing continuous buy and sell quotes to help price discovery and maintain investor confidence. So in terms of services for issuers, there's underwriting securities offerings, there's advisory services, and there's optimizing capital allocation. So in terms of securities offerings such as IPOs and debt issuances, they assess the value of securities, determine the best price, and assume the risk of selling the securities to investors. In this process, provides issuers with immediate access to capital. In terms of advisory services, there's M&A, for example, corporate restructuring, and other complex transactions that they provide guidance on to structure deals, conduct due diligence, and navigate regulatory requirements. In terms of optimizing, capital allocation, advising on the optimal mix of equity, debt, and hybrid instruments, investment banks help issuers optimize their capital structure, minimize cost, and enhance shareholder value. In terms of services for investors, we're talking about access to investment opportunities. So a wide array of opportunities, stocks, bonds, derivatives, alternatives, helps investors to diversify their portfolios and achieve their investment objectives. There's research analysis that's involved, whether it's market trends, industry sectors, specific investment opportunities. This information helps investors make informed decisions and manage their investment risks effectively. And in terms of brokerage services, helping to execute trade, providing market analysis, and offering investment advice. In terms of syndication and distribution of securities, syndicating securities, reaching a broad base of investors, and then matching investment objectives. In large transactions, investment banks form syndicates, collaborating with other financial institutions to share the underwriting risk and distribute the securities to a broad investor base. And this approach ensures that the large capital needs of issuers are met efficiently. In terms of reaching a broad investor base, they have extensive distribution networks to reach both institutional and retail investors. And this broad reach ensures that securities are widely marketed and sold, maximizing the capital raised for the issuers. In terms of due diligence and risk assessment, performing extensive due diligence is something that investment banks do on issuers to assess their financial health, industry position, and growth prospects. Involves analyzing financial statements, market conditions, business models, etc. In terms of evaluating risk, we're talking about credit risk, market risk, regulatory compliance, all of that good stuff. And then in terms of providing comprehensive information, includes financial analysis, risk assessment, market outlooks, and the like. Investor relations and corporate finance advisory, developing investor relationships, investor relations services, and corporate finance advisory. In terms of corporate finance, we're talking about capital structure optimization, capital allocation strategies, investor targeting. These services help issuers align their financial strategies with their long-term business goals. And in terms of developing investor relationships, we're talking about maintaining strong relationships with investors, communicating strategies to keep investors informed about the company's performance and strategic direction. And when it comes to global reach, investment banks also do cross-border transactions. So when we're talking about cross-border transactions, we're talking about a global scale, facilitating those that involve multiple jurisdictions, and they help issuers and investors navigate regulatory complexities, currency risks, and cultural differences in international markets. So with local market knowledge, investment banks assist clients in accessing funding sources and investment opportunities across different regions, and this enables the businesses to expand internationally and investors to diversify their portfolios globally. So finally, we're talking about efficient capital allocation. We're talking capital allocation to its highest and best use, which is really the capital management game. And so by bridging the gap between investors and issuers, investment banks ensure that capital is allocated to its most productive uses and supports economic development in terms of driving progress in economic development and stability. In terms of the vital role of investment banking, they serve as, once again, a critical intermediary, facilitating capital flows and enabling efficient resource allocation. So hopefully this was helpful, guys. On to the next lesson, lesson 7.